Why is futures trading better than Forex? So today I'm going to be asking Grok why futures are better than Forex. I did another video on what it thinks, what Grok thinks. Grok 4 just came out. It's brand new. Make sure to go check out that video. It's going to be on our YouTube. But I wanted to break down why futures trading is better than Forex trading. So act as my day trading coach. So one thing about AI, you want to make sure that you give it a good prompt. So act as my day trading coach. Can you please tell me why futures trading is better than Forex trading? Think about this from the perspective of a beginner trader. Make a list of pros and cons and any considerations I should know about relating to futures. All right, so let's see. I'm going to give my opinion, and then we can go into what Grok is going to say. It's going to think for a second, but both of them have prop firms, which is great. For if you're new, you don't want to risk your own capital. You can use a prop firm. It's very low risk. Now, before I start to read this response, there are a few things that I think are important. So liquidity is very important. So being able to get in and out of your trades, actually knowing that so that's one thing. The next thing is going to be, can you trust your broker? It's the most critical thing of being able to trust your broker to give you the right fills, which means that when you buy at a certain price, you're buying at that price and not anything higher or lower. That everything is going to move smoothly, that there's a regulated market. So futures have a regulated exchange. All the brokers are regulated. There is no offshore scammy brokers when it comes to futures trading. That's very obviously critical for any new user. You don't want to have to worry about your broker screwing you over somehow. Now, the leverage is fantastic on futures trading. So what that means is you can have a legitimate start to your trading career with $1,000. Now, I'm not saying that it's going to turn from $1,000 into $1 million, but the leverage is really nice when it comes to futures trading. So you don't need to put $100,000 into an account the way you would if you trade stocks. Stocks are very capital intensive. You need a lot of money to make money trading stocks. I don't recommend trading stocks for if you're a beginner and you don't have a lot of money. Trading futures will give you a really nice leverage. They're very liquid, which means that you don't have to worry about volume problems. You can get in and out of trades very easily. You can always, if you need to emergency break out of a trade, you can always do that, and you're not going to get completely rinsed on your fill. So what else is there? So I mentioned liquidity. I mentioned broker risk. I mentioned leverage. I mentioned prop firms. Yeah, I think that's a pretty solid start before we get into this response here. So why futures trading might be better than Forex trading for beginners. Let's look at some of the key reasons here. Stronger regulation and transparency. Interesting. Reduced counterparty risk. Okay, so Okay, so let's get into regulation. Centralized exchanges. Super important. So what this means relating to Forex is Forex has a bunch of different brokers. There is no New York Stock Exchange of Forex. So Awanda, Forex.com, all these other brokers or the exchanges are where you're routing your orders to. So they're all different, which means they all have different prices. So you don't have to worry when it comes to futures because they are regulated by this. It's all based on the CME, regulated by the US. You don't have to worry about any of that. So Forex is over the counter. OTC is over the counter. So there's higher risk of scams. Counterparty risk. This is very similar. This is actually relating to the brokers. This is relating to the exchanges. And yeah, which can lead to issues if they're unreliable. Now, standardized contract and structure. So what this means is, for example, let's just actually read a little bit. Fixed contract size. Perfect. So what's actually nice for beginners is that you can trade the micro NQ or micro ES. What that means is for every point, so if price goes from 5,000 on ES to 5,001 and you were to buy at 5,000, that means that you just made $50 if you bought the ES futures. If you bought the MES or the micros, then you'd be up $5. So if you're a beginner, you have a tool that's a lot more accessible to you that that moves a lot slower in terms of your P&L, which is much more appetizing to trade, honestly. Like you're probably not going to want to start out trading the mini, which is the bigger one. The names are a little bit weird, but which is the bigger one right when you start. You want to probably trade the micros. Taxes. This is a huge plus for futures trading. So I'm not an accountant. You need to talk to your accountant. This is not tax advice, but there's favorable tax treatment. So 60% of your gains get taxed at the long-term capital gains rate, which means that is a favorable rate. That's a lot less. And then 40% of your gains get taxed at the short term, which is the higher ordinary income rate. Liquidity and day trading focus. So one thing that is not as advantageous is swing trading. You don't really hear of too many people swing trading futures. The reason for that is the margin requirements are a lot bigger. There's another benefit, which is not in here. The margin requirements on a broker like NinjaTrader or Tradeovate are fantastic. So, and what that means is if you have $1,000, you can trade a bunch of contracts of the micro NQ or the micro ES futures. You do not need a lot of money to actually enter a position. So that's a huge plus. So day trade. So what I was saying was, you don't really hear about people swing trading. The reason is if you hold overnight, those margin requirements are not favorable at all. And what that means is instead of requiring $100 to hold one micro, it might be, I don't know, 10 times that or 20 times that. So you might need like $3,000 per micro or whatever it is. I don't know what it is off the top of my head, but I know that if you trade the NQ, the bigger contracts, it goes from $1,000. If you hold overnight, it becomes like $35,000 per contract. So it's obviously a huge difference, and you probably don't need to do that. If you want to, you can. You just need to put a lot more money in your account. So diverse asset exposure. I don't really think this is too important, to be honest, because most people are going to trade ES, NQ, YM, or RTY, which are the major indices like the NASDAQ, the S&P, the Russell, and the Dow. So pros, okay. Limited hours. So limited hours, let's just cover the cons here. Limited hours. This is probably not really a concern. You don't really want to be swing trading either way, but or at least holding overnight either way. But if you don't want to be trading 24 hours a day. So the futures market opens at 6 p.m. Eastern time and it closes at 5. It's only closed for 1 hour a day. So, I mean, that's totally fine. Here, higher capital requirements can be $1,000, $10,000 per contract. So this is only if you hold overnight. So this is actually missing some context here. You can get much more favorable margin requirements if you hold just intraday. If you get in and out, if you're a day trader, you get in and out during the day. This is perfect. So this is missing some context here. Expiration and rollover. This is actually not really a concern because you're just going to go to the next contract anyway. TradingView will do this for you automatically. If you trade the NQ1, or it's actually NQ1 exclamation point, ES1 exclamation point, MES1 exclamation point, or MNQ1 exclamation point, you don't really have to worry about this. It automatically rolls to the best contract and to the most highest volume contract anyway. Fewer brokers. Yeah, I would agree with that, but that's fine because we have great brokers like Ninja. I have no affiliation with them, but NinjaTrader or Tradeovate, and they're super reputable, very, very big brokers, and that's what you want to look for. And if you want to trade with interactive brokers, you can, or a Schwab. I know that the commissions on Schwab are a little bit higher, so just be mindful of that. And by the way, you can always negotiate your commissions. I don't know if everyone knows that, but you can negotiate your commissions. And okay, going down. Broker selection, super important. There are very big brokers that you can trust. This is probably not the case, I would say, to be honest. This requires a little bit more context. Education first. Of course, no matter what, you want to be looking at paper trading first. If you're brand new, you want to be looking at paper trading first. And market choice, okay. Yeah, so yeah, I mean, these are the main items on why futures trading is better than Forex trading. Luckily, as a trader, you have edgeful, which I'm opening up right now, and we have everything. We have futures trading and we have Forex trading. So you can see right here, I just opened up futures. Now I can switch to Forex, stocks, crypto. What edgeful does is it gives you the probabilities of so I'll just quickly go to the initial balance. So it will tell you the actual probabilities around a certain strategy. So what you can see here is on YM in the last 6 months, almost 70% of the time, price is only going to break out to one side of the initial balance. If you want to know what that means, scroll down, watch this video. We have a video explainer for everything. But whether you trade stocks, Forex, crypto, or futures, we have everything for you. So if I were to switch over to Forex here, we have all of the tickers, or all the pairs rather, that you can actually trade here. So if this was helpful, please subscribe. If you guys want me to do more AI videos, I'm more than happy to. Just let me know in the comments. Appreciate you guys. Have a good one.